Welcome to our presentation today. My name is Rob Booker. I'm here with Wes. Hi, Wes.
Yo, hi.
This presentation is titled How to Backtest for Profit, and we're going to feature the rollover Finch robot, otherwise known as the Finch robot. Same thing. We taught you a webinar just a couple of days ago on how to set it up, and today we're going to talk about how to backtest it. But before we begin, I want to quickly walk through a couple of very important observations and rules. The first and only rule of trading is that we don't let a loss get out of control. Running a robot is not an excuse to hand over your account and say, oh, it doesn't matter what happens, I've got a robot on the account. We never let a loss get out of control, and that is always within our own control. We always manage our losses, and that's our highest priority. Your highest priority as a trader is to practice getting into trouble and then getting out of trouble and learning to take a loss and learning to deal with it. There is no more important rule. And the reason that we have a large family of traders, over 1,000 traders around the world who are doing well, is because they have learned this lesson. Period. I could talk about it for 3 hours, but that's all I'm going to say today. The second point that I want to make before we begin is I want to answer this question: do robots work? And the answer is anything works if you make it work. There's this debate about whether robots work. Today I got a message from Tim, and he says, I've talked to a lot of MetaTrader 4 programmers over the years who say that robots don't really work. Well, what they're saying is, if you leave it unattended, it's not going to make you rich. That is true of every single thing in the entire world. Left unattended, without any effort on your part, nothing works. A robot is no different than a discretionary trading system in the sense that you get out of it what you put into it. The kind of work that you need to put into robot trading is different than the kind of work you need to put into discretionary trading, in the same way that being a dentist is different than being a plumber. You're still extracting stuff from inside a tube, it's just different. It requires work to become good at any of these. I like the work that goes into making money from robots, and I'm willing to put that work in. If you're not willing to put work in, or you want to get rich overnight, there's no place for you in trading at all. But robots work if you make them work. A lot of people say, well, the robot went through a losing streak. And my answer is, why didn't you do something about it? And someone will say, well, the robot's supposed to worry about it. No, you're in charge and you're in control. Remember that as we walk through today's presentation. I next want to just mention why we backtest. There are several reasons why people will run a backtest in their trading software, either manually or with a robot automatically by watching the robot work historically. The first reason is, and the most important reason is, we do backtesting to quickly find settings that we like for the robot so we can start trading. But other reasons that we backtest is to find where trouble occurs. I find it interesting sometimes to run robots exclusively for the purpose, in backtesting, to find where they fail. And then I look at that place where they fail, and I try to find common reasons that robots fail, or trading systems fail. And one of the major reasons is when we keep trading through holiday periods, or if we trade or let a robot run right before the Greek vote, or other major news, not non-farm payroll, not interest rate decisions, but major votes on leaving the European Union, for example. And I like to find where that trouble occurs, and then I like to identify that that's a problem so that when I can see that coming, like if we have another British vote or if we have another Greek vote or whatever, I know that historically that's been a problem and I can deal with it. Some people, however, obsess about trouble occurring, and then they're every 5 minutes asking me if we should turn the robot off right before the Michigan Bicycle Index or the Wisconsin Cheese Report. And that kind of stuff is unacceptable, and we don't obsess or worry about that kind of thing. Some people backtest because they enjoy it and it's fun to do. We're going to do some of that today, and I don't disagree with that. Some people backtest to super optimize their robot and find the absolutely perfect settings that make $1 bajillion. That can also be interesting, but we try to avoid doing that. In the end, we backtest to find basic settings that we like, and then we trade with those settings. We're not obsessed with finding perfect settings that leave us feeling 100% comfortable. You're never going to feel comfortable. And if you've backtested so that you can, and this is in air quotation marks, feel comfortable, you are going to be richly rewarded with a margin call. You should never finish a backtest and say, oh, my robot's perfect. I'm going to set the robot on, and then I'm going to go into cryogenic sleep for 25 years. That's not going to work. You never backtest to feel comfortable so that the robot is responsible for your success. You backtest to find basic settings that you will allow to work, and then you will manage it. I have often said that running a robot is like owning a franchise fast food restaurant. You own the restaurant. You show up once a day or a couple of times a week to make sure that things are good. You have to fire employees that aren't working well. You have to hire managers that are working well. You have to make sure that the restaurant is clean, and you have to talk to customers to make sure that they're happy. You cannot just buy the restaurant and then wander into the woods for 10 years and expect that you'll come back to a pile of money. Now that's work. You have to work. But it certainly is better than making the food at the restaurant every day for a very small amount of money. When you are a robot trader, you find basic settings that work, and then you manage it like you manage a franchise. You have to show up and think about it. But it's better work than working at the franchise. Now, the goal of trading is different. The goal of trading is to make money. But the goal of backtesting is to find settings that might help you make money. In other words, the goal of backtesting is to research which franchise restaurant you want to buy and run. But the actual running of the restaurant, the goal of that is to make money. Never confuse these two things. Never confuse backtesting with trading. Some people finish a round of backtesting and they feel like they've just made the money. And they feel like they have this euphoria about the robot. And they're like, my robot made money 10 years in a row, as if that actually suddenly made them money. Do not confuse research and testing with actually making money. Never walk away from a backtest feeling like you're walking on a rainbow. Okay? You also want to avoid endless backtesting, trying to have 100% winners, finding the perfect settings, or ever trusting the backtesting. This can be one of the worst things that you can do. Never trust your backtesting, meaning take away some settings that work, but never trust it completely. In the same way that you never hire a person to work with you and then never, ever check their work. You always make sure that you are checking the work of the backtesting. All right, I have some more to say about things that you do want to do and warnings that you want to have, and we'll get back to those a little bit later on. I want to welcome you all to the presentation if you're just getting here. And Wes, let's have you become the presenter. And today we will backtest. That means let the robot trade historical data, the Finch robot. If you don't understand what the Finch robot is, then you've been missing recent webinars, and that's okay. You can just go back and watch them later on. The Finch robot is our favorite robot, and it is a robot that takes a couple of trades in the same direction in the hopes of making money. The Finch robot is built with Knoxville divergence, and all of these are terms that you can learn about from watching our Wednesday webinar. We'll send it out to you to make sure you get a link. Or you can go to youtube.com/RobBooker, and you can find that video of that recent webinar at that location. I will post that link inside the webinar right now so that you can learn more about what the Finch is. But today, we're just going to backtest that robot, assuming that you already know what those settings are. Okay, Wes, this is the strategy tester in MetaTrader.
Yep. Yeah, this is strategy tester and MetaTrader. I don't really have anything else to say about the strategy tester and MetaTrader. I mean, we talked about it a lot on Wednesday.
Yeah.
And I got like 2 hours of sleep because I was up back testing for so long. So it's pretty awesome.
Good times.
Pretty much everything's going to be really random, I think, coming out of my mouth. So Rob's going to have to really work, keep me on track.
Okay. All
Um,
right, what we're doing right now is we're changing the settings of the robot. Now, every robot comes with inputs or settings. We walked through each of these settings recently on that webinar that I just posted from YouTube. The basic settings for the rollover Finch robot are to have a first trade of zero point zero 0.01 lots and a second trade of zero point zero 0.03 lots, a first profit target and a second profit target of $1.30. If that sounds like not a lot of money to you, we all start making a little bit of money and we all grow into making more money. Today, we want to start off by showing you what happens if you run the Finch robot with these settings and you go back to what, Wes? 2000, the beginning of 2016? That'll be a quick test, wouldn't it?
yeah, yeah, it only take a few seconds, I think. So we're running from January 1st, 2016 to September 1st, which is just about a week ago. Um, I don't like running it right up to the day that we're at because I don't know. Sometimes the
You
data
might
is
get
actually
stuck in
not
a
really there
trade.
for it. Well, sometimes the data isn't in there if I haven't had my platform open or whatever. So
All right. So
there's
what
the
does this
graph.
graph right here show you? What does the graph show you, Wes?
So the blue line of the graph shows the balance of your account. So as trades are opened and closed, you see the blue line going up. I mean, depending on the robot, sometimes you see it going just straight down, like the exact inverse of this line. um, but the green line is where you're showing your equity. So after it closes a rollover trade, the rollover trade, as we talked about on Wednesday, is the one where the first trade has gone against you a little bit, and a second trade is opened to try and balance out the first trade's loss and then make a little bit of profit on top of that. So that's why you see one trade is closed at a negative and the other one is closed at a positive that makes up for and goes over um, the first trade. I don't know if that makes sense or not, but
Yeah.
that's why you see it going down and then up when this is one set of trades. So there's only two trades here, one, two, and they close at the same time. So whenever you see a little dip, that's when a rollover trade has been initiated.
All right. I
So
like it.
yeah,
So when you see those dips, you are in a losing trade until it comes back. Sometimes those dips don't come back and the line just drops off the side of the chart. We'll show you an example a little bit later on where the line drops off all the way to the bottom at the very end of your back testing. So at the very last end, it was going really well until the very end, and the line just drops to the very bottom, and you're like, what the heck happened? What that means is you opened a trade that was at a loss, and the back testing had to stop because the data was over. It doesn't mean your robot stinks. It just means you ran out of data. Okay,
yeah.
this robot was profitable. Let's look at the report. Can you walk us through a couple of items on the report?
Yep. So there's only a handful of things on here that we actually look at when we are checking out how a robot has done and how settings have done. First off, we look at the modeling quality, which is 90%. On a 5-minute chart, 90% is as good as you're going to get. It's good. I mean, that's what you're looking for is 90% modeling quality. Um, and then we look at total net profit. That's well, basically gross profit plus the gross loss. Sorry, or minus the gross loss. I don't know what you'd call that since it's a negative number, but anyways, the total net profit is how much you made after you take the profit and subtract the losses. The loss trades again are the when a rollover trade was initiated, the first trade was technically in a loss, and the second trade made up for it. So even though it's showing a loss, the set of trades, the set of two trades when the rollover was initiated, brought the first trade into profit as a cumulative total. So
Yep.
hopefully that makes sense. We had a total of 103 trades, and our maximal drawdown was $68 or 0.68% of the account. So maximal drawdown is how far your account has drawn down total between those, well,
Yeah, when it
one
was
or two
holding a losing
trades.
trade at one
Yeah.
point, it was holding a $68 loser, and that was the biggest it was holding. And that eventually came back, and everything was fine. And it was maybe this was $1,000 account, maybe it was a $10,000 account. but that shows you at the worst how bad a trade got while the trades were open and they were losing. This is a really important concept. The reason our robots are built and do not increase the size of their trades automatically as the account grows is so that we can see the maximum drawdown it would take with one trade size. Because you never know when the drawdown's going to happen. In this case, the drawdown probably happened 3 months into the trading. But we could start trading tomorrow with the robot, and it could go through its worst drawdown right off the bat. And if Murphy's Law is anything, that's exactly what's going to happen to you. You're going to go through the worst period of time trading right after you turn the robot on. So you want to know how bad it gets. You want to know the worst it can do. I'm obsessed in robot testing, not with how much money it makes, but with how much money it loses when things go bad. So obviously, with our small trade sizes, as we preach all the time, nothing really bad happens. Even if you had a $100 account, your account would have doubled in size with a giant drawdown at the worst trade. Even with a $100 account, you could have run this robot over this period of time.
Awesome.
All right, I just want to say one more thing about modeling quality. Modeling quality is, as Wes discussed, the quality of the data that ran the test. If your modeling quality is low, there might be gaps in your data, or there might be places where you just didn't have any data, and so the robot was basically trading, and it was trading blind. It didn't know where the data was, and you could go through big gaps and whatever else. 90% is good. Some people become interested in downloading alternate programs and extra things like Tick Story to get 99% modeling quality. This is interesting, but I don't do it. And the reason we don't do it is when you get a 99% modeling quality with Tick Story, you're using data that comes from an outside source. When you get 90% modeling quality on the platform that your broker is on, you're using the data that your broker has. So you're getting 90% modeling quality with data that your broker has. If you're trading the 1-minute charts, you just need to watch out for the fact that backtesting on 1-minute charts is a difficult to believe scenario. So we don't do a lot of backtesting on 1-minute charts because the data is just never going to be really great. 1-minute charts, it's too hard to get super reliable data from your broker. Now, last of all, what if you don't know how to get data from your broker? You go up to the Tools menu in your platform, History Center. You pick the currency pair that you like, and then you click on 1 minute, and we're not going to do this, but you click on 1 minute and then press the download button and wait a little while.
Yeah. I would also add, you have to double click. So if, like, for instance, I just double clicked on the Euro US dollar, if you single click on it, it doesn't actually select it. You want to make sure you double click on it so it selects it up here at the top, Euro US dollar 1 minute, whatever else, and then press download.
All right.
Just to be sure you get, the data you're looking for.
Those are the basics. Thank you so much, Wes. Now we want to have some fun today. We want to run some tests on this robot that we love so much, and we want to show you how bad things can get, and we want to show you how good things can get. Wes, what was the most successful currency pair that you tested overnight when you were buying iPhones and backtesting?
Well, you know what? I think it was probably just about a tie between the Euro Canadian dollar and the Euro US dollar.
Okay.
But I don't know. I'd say we would switch to the Euro Canadian dollar. We don't do much testing with that in these webinars, and it probably starts to feel left out.
Yeah.
So.
It is easily the most successful robot running currency pair that we have. The Euro Canadian is awesome. Let's go back to 2015 and see if this trading system that does not have a stop loss can last from 2015 to the present.
Okay. Same default settings?
Yeah, we'll just use the default settings.
Cool.
When you're backtesting a robot, stay with the default settings that someone has suggested to you that built the robot. After you can prove to yourself that you feel comfortable with those, go ahead and play around all you want with additional settings or changing things around. We're going to do it after we run this test. We're going to play around with the settings, Wes, and take a look at what the consequences of playing around with the settings are.
Oh, yeah, we're going to break this thing. It's going to be awesome.
Okay.
So those are the default settings on a Euro Canadian dollar.
Yep.
which is awesome.
Yeah, that's why we run this
And
robot.
oh, dude, 1.6, I guess 1.69% drawdown, and it made 4.3%.
Okay, so I would like Wes to make a request.
Okay.
Can we try to make just a garbage load of money from this and see how bad it gets if we try to do that?
Yeah, sure. You know what? Why don't what we do? We figure out how much money we want to make, and then just multiply everything by a number that would make it.
Okay, let's do
Because
it.
if we multiply everything times 10, we would have a 17% drawdown, but we should make $4,300, right? Is
I
that
would
about
like
right?
to make I would like to make $10,000.
$10,000.
So
Wow,
let's
that's
increase our trade size by, can we do it by 25?
yeah. I mean, I have to actually get out a calculator to know how to do that. Whoa, that's big.
Oh,
Wow,
that's a big
that's
numbers.
a big
That's what we're all
calculator.
about. We're about the big
I'm
numbers,
moving that
everybody.
over here. Okay, 25 times 0.01. Oh, well, shoot. I
0.25.
probably should have done that in my head. That was kind of a waste of time. I
It
didn't do
is early.
0.75.
Is everybody having a good time? Are you glad to be here? Welcome, everybody. Glad to see you here.
All right. All right, there we go. 32.5. Okay, that looks about right. Let's give it a shot.
Now you can, what we're going to do after we run this test as we watch it make it as a garbage load of money, what we're going to talk about is how you backtest with a smaller account size if you want to simulate a smaller or larger account size. Then we're also going to talk about how Nimmer has achieved 99% modeling quality. He's got a cool link that he's going to send us. And we're also going to mention that, don't forget, if you run your robots on a demo account or a backtester, and then you run the robot live with real money, your results will be different. You cannot expect that demonstration results are going to mimic real results. All right, how much money did we make?
We made $10,739.68. So we made 10.7. No,
Okay,
sorry, 107%. And we drew down by 42%.
that's awesome. Now, does this mean, Wes, that you could just turn this on tomorrow and you would, within a year and a half, make 100%?
Oh, I'm going to. Uh, no, no, that I would not recommend this.
Okay.
I mean, seeing that we drew down by 42% and something that you mentioned, which is that your live results are going to be different. Um, I mean, they just are. Just because it only drew down by 42% over the last 1 year and 9 months, or 1 year and 8 months, however that works out, doesn't mean that it's going to only draw down by 42% all the time. Like it will never go further than 42%. I mean, we take this back further, and you'll see that there are a couple of anomalies randomly throughout the past, 10 years or so. And granted, that's probably that's those are anomalies, and most likely, you won't see those again. But there are always chances you'll see something like that or worse sometime during your live trading, and that's why it's important to try and get your drawdown as small as possible, and that's the most important thing, more important than your total net profit. Because if you get into a big set of losing trades that margin call your account, this total net profit means nothing because you have nothing. So
Yeah,
I don't know, just
very true. Okay, a couple things on the settings here. What does spread refer to, and why is it 3-0?
oh, this. Okay, so spread refers to the difference between the ask and the bid price. So I don't know, maybe you can explain that part
Yeah.
better, but the reason why we
So,
use, oh, you go
yeah,
ahead.
so, yeah, all right. So we put 30 in, and that refers to 3. It's a spread of 3. Because there are, on Owanda's FX platform, 5 digits after the currency pair quote, you have to type in 30 to get a spread of 3. or 5-0 to get a spread of 5. Because the spread on the euro is so low, a spread of 3-0, or in other words, 3 is totally adequate. How do we change the size of the trading account that we're using when we're doing our back testing?
If you're going to expert properties, testing, then you can change it right here in initial deposit.
So if we ran that same test with a $1,000 account, that $1,000 account would be obliterated. It would
Oh
not
yeah,
be able to survive a $4,000 drawdown.
correct.
Okay. All right, let's now we've played around and made some money. Can we play around with this and lose some money?
Sure. What would you like to do to lose some money? Put in a
I would
stop
like
loss?
to I would like to try to make too much money on the first trade. So let's keep the settings the same, but let's try to make $200 on the first trade because we want to make a lot of money. A lot of times what happens to all of us is we get a robot and we get excited, and then we literally, and I've done this, we literally just decide that we like a setting and we're just determined that that's going to work. And we dream up this whole scenario where our robot is going to be magical. All right, so let's press start, and we're going to try to make $200 because we just want to. This is so typical of me and so many people that build trading systems. We have a dream one night where we make a lot of money by having some dream setting on our robot, when in reality, that dream setting might not really work. Okay, now we're just making so much money, it's disgustingly ridiculous, so everything I just said is a lie. But, okay, this was not planned, by the way. This is amazing and wonderful. Look at that.
Wow. It's the same
Okay.
42% drawdown, but we made 204%.
Okay,
Wow.
that did not prove my point at all.
No, it did not.
Here are
Man,
your
that
new
was.
settings for the Finch. Okay, I don't know what to say.
Uh, yeah.
Um, I'm speechless.
Yeah, I don't even know what to say other than I want to change this to 300 now.
Let's do it. Let's just now. Okay, that's pretty amazing.
Yeah.
That's so hilarious.
Yeah. I like it when we hit something that's kind of funny and
Yeah.
kind of cool, although still highly not recommended.
For those of you that want to get 99% data modeling quality in your backtesting results, I just posted a link in the chat window of our webinar to Nimmer's Google Drive course.
So that worked, Rob. $300 first trade profit. It did not make that.
So it was trying to make too much money and eventually it could never come back from
Yep.
the brink. That's a good notion. Now the questions emerge about what's an acceptable drawdown. Our answer to that is 7 to 10% would be fine with me as long as the robot is making twice that amount of money over the time period that was tested. The problem is that every single individual has a different risk tolerance. You have to decide. I know this puts it back on you. My answer is 7 to 10%, but you have to decide for yourself. If you walk out of this webinar and you say, oh, Rob said 7 to 10%, then you're a sheep, and sheeps get slaughtered. You will just die. Do not just take somebody else's number and run with it. You have to decide what number is going to scare you. You have to decide that. No one else can make that decision for you. All right. That
Yeah.
was pretty fun playing with that $200 setting. Let's do it. Can we do something completely different here? Can we change the settings back to zero point 0.01 and 0.03 and then $1.30 and $1.30? And then could we test the British pound and see if it can last through Brexit, all of 2016, for example? Can a robot without a stop loss profitably trade through the biggest economic news on that currency pair in 20 years? And it does appear that it's making it through. And it looks like it made it. So
Yep.
in other words, this robot lasted through Brexit. I watched this morning as I backtested, and Wes, it even took trades while the British pound was dropping during the time that the vote was coming in. It even took those trades, and because the profit target, look at those, if you scroll up, you just missed a couple really big, look at that. Like, these were times when it just went through a bad period. It finally got out of the trade. So let's see if there's. Oh yeah, look right here, Wes. You see it at 42.90, and then it drops to 34.85. You can see price just drop
Uh,
precipitously.
oh yeah.
That's Brexit. That's pretty
Yeah.
cool.
That's pretty cool.
And it makes it through that period of time. The robot isn't built to survive any kind of catastrophe, but it is built to work its way out of trouble, even if there are some significant problems. We don't build robots that you're supposed to turn off during the news. We build robots that are supposed to stay on all the time, and we want to know how bad it gets if that happens. And the answer is it's not that bad. What happens if we go all the way back to 2014, though? Does this robot have a problem?
I guess we're gonna find out. Usually, yes, in 2014 and 2012, um, but it more or less depends on your settings. I mean, there are settings that will get through it, and then there are some that don't.
I'm very interested in this. Can it survive? It looks like it's in a bad trade right now.
Yeah, it is.
So it is holding on to a trade
Yeah,
that
from
just
July.
isn't coming back. Right.
Yep, it did not
So what
make it.
happened here? So what does that mean at the end?
All right, so what it means is when we have run out of time in our test, because we're only testing to September of 2016, then it just closes the trades that you had open or that were open whenever the tester got done, and it just takes that loss. So that's why at the bottom here we see close it stop and close it stop, because it closed these last two trades because the tester ended on August 31st at 23:59, which was 11:59 p.m.
Okay.
So, yeah.
So what I want to do now is I want to show everybody a daily chart, and I want to show you where it went wrong, and I want to show you what we would do about it.
Do you want me to hand over the presentation to
Yeah.
you? Okay. There we go.
I stand by my claim that the most important skill a trader can learn is not how to make money, but it's how to get out of trouble. And in this example, the British pound US dollar was in the midst or the beginning stages of a gigantic loss. The robot took a trade right over here on a 5-minute chart. This is a daily chart. The robot got into a trade up here, and then as many people would say, the robot was stupid and got itself into a giant problem. This is a huge issue. The robot never came back from this loss. Because it took a trade right here, the Finch robot ended the test without ever closing that trade at a profit, and it missed out on every trade that came after. It couldn't take any additional trades on the British pound, and it got stuck. Some people at this moment say, well, I'm not going to trade that robot because that robot sucks. That's not actually an accurate way to look at it, because every discretionary trading method, every trader will eventually make a mistake, even on a perfect method. The best skill that you can learn is the skill of getting out of trouble. And in this in this presentation, I'm going to share with you some ideas on what to do when a robot gets into trouble. The warning is that some currency pairs over some periods of time will not do well, and that should really be in quotation marks, in backtesting, but can make a ton of money if you learn to work through a bad trade. What should you do if you have a bad trade? You should first of all know what your max loss is. You should have a number in mind. 5% loss, 2% loss, 3% loss, whatever it is. When that loss occurs, when you reach that level, you should close half of your bad trade manually. And then you should move to the long-term charts and find a trade to take. Or, optionally, close the whole darn thing and make the money back. So let's go back to the chart. When I found myself in this loss, and let's say that right here in time, I reached a 5% drawdown. I could just close the whole trade and let the robot look for its next trade. The real problem occurred because it took two trades too fast, too close together. And because it did that, it could never come back from the disaster. So one way to handle the problem is to simply close the trade at a 5% loss and walk away from that situation. Eventually, the British pound does come back. It makes a really nice recovery. So option one is to close the loss. Option number two is to wait longer for trade number two. Some people, instead of waiting 70 pips for trade number two, wait 500 or 1,000 so it doesn't take two trades too close together. Trade from the daily chart or even the weekly chart. Next, what I'm going to do is show you what I might do if I was going to trade from a weekly chart and try to get out of trouble. This is 2014. This is where the bad trade occurred. On a weekly chart, it eventually fell all the way down to 45.58. It created bullish Knoxville divergence on a weekly chart. That would be a moment in time where you could add to that trade. It recovers then by 1,500 pips. And you could use trade number three here of a larger size to get yourself out of trouble. If that seems like a long time to wait for a bad trade to come back, well, it is. We never said any of this was easy. One of the reasons that we trade multiple currency pairs at the same time is so that we have the option of letting one currency pair go bad and then trading our way out of trouble. We'll do a whole webinar on how to take long-term trades and work your way out of trouble at another time. The fourth option is to hedge, or in a separate account, a completely separate trading account or the same one, sell the British pound US dollar, and when you've made the money back that you were losing, close the whole thing down. A fifth option is get a separate account, run the robot while that trade is open and losing, run the robot again on that same pair and make money from that robot running on that same currency pair. All of these are options that you have available to you. My favorite at the top is close the loss. My second favorite is to wait longer for trade number two, meaning switch over to or trade number three, switch over to a super long-term chart, wait for a divergence, and then take the trade. That is my other favorite method here, and it can be incredibly effective if you give it enough time to work out. If what you've done is, at this point where it was in a big loss, you close half of the trade, the loss is really small when it gets down here to the bottom. You don't have as much of your trade open anymore. You can take a trade number three and reasonably easily make the money back. It's not that bad. Now, if you're wondering to yourself, why the crud would I ever trade a robot that gets into this kind of trouble? The answer is, many times, it doesn't actually get into that trouble. Many times, it gets its way out of that trouble, and many times, you'll never even see this kind of thing happen. So it's worth that. The second thing is, we have other robots that we'll be teaching you in coming weeks, like the Finch time sessions and the ultimate Finch of Doom, that don't get into these problems. They just don't have these problems. The problem is they don't take as many trades either, and for those of you that like to have a lot of trades, well, you would want to run the Finch. Okay, let's take it back to you, Wes. I'll answer some questions, and we can do some more testing.
All right. See my
Okay,
screen
I'm going to
okay?
take a look at the questions right now.
All right.
Susan says, why no stop losses? So, Susan, the Finch robot is built with the rollover system. And the rollover system is to say, if trade number 1 is a loss, we take trade number 2 with a slightly larger trade size, which typically will get it out of trouble. If you like a robot with a stop loss, you can always put a stop loss in the Finch robot and run back tests like that. We're not opposed to stop losses. We're not dictators. And we're not here today to tell you, oh, this is best, or you're wrong, or people who do whatever are dumb. We're here to show you what works for us, and then you can adjust the settings to work for you in a way that you like. We don't use stop losses on the Finch robot inside of the robot because we found that the Finch makes more money when that's the case. Jim says, if you're going to write a robot to trade futures, what would you do? Well, we have the robot. The Finch robot is built for TradeStation securities, not FXCM's TradeStation charting. It's TradeStation securities. We already built it for that, and you could actually trade futures with the Finch robot or stocks on TradeStation. Thinkorswim doesn't run robots. Everybody asks me this. Thinkorswim, as far as I know, does not run robots. And if I'm wrong about that, then we can build it, but it doesn't run robots. So,
Yeah.
all right, what are we running right now?
Even if they did, yeah, their programming language is so limited. That's why the Knoxville divergence indicator is kind of ugly on it.
Yeah.
Anyways, all right. Well, I don't know. What would you like to do? Do we want to try and fix something about the pound dollar, or move on to something else?
No, I don't want to fix it. I'm happy with just knowing that it gets into trouble at that period of time and watching out for that. Let's take a look at what's another one you have data on? Do you have any Japanese yen?
I have data on everything. So
How about a euro yen? We often warn traders that trading something like the Japanese yen is problematic. And that reason is the Japanese yen can trend significantly and for longer periods of time. I still run the robots on Japanese yen pairs just knowing that it's going to get into trouble and I'm going to have to get involved. So for TradeStation Securities West, we'll put the Finch robot inside the robot course today. Would that work for you?
Yeah,
Okay.
I can do that.
If it's not obvious to you already that we use MetaTrader, which is right in front of you right now, let's just say this is our preferred method of trading robots because it works, it's stable, and we have years and years of experience. Others of you prefer NinjaTrader or TradeStation Securities or your other favorite. Everybody can have their favorite. We are not here today to tell you we could make a lot more money in selling stuff if we were very dogmatic and told you that this was the only answer and whatever else. But we don't talk like that. You pick what works for you. This is what works for us. Oh, the Japanese yen. What happened, Wes?
Well, I took a couple of trades. Let's see. Well, actually, not two. Yeah, so May 31st and then June 7th of this year. I actually didn't hold on to losing trades too long before it closed out. So, and then
So theoretically, given more time, this may have worked its way out of trouble.
Oh yeah, I mean it was only down what 2.7%, and that
Now,
wasn't even the largest drawdown. So
could we make this take a bigger second trade to see if
yeah.
it can get itself out of trouble?
I think we should. I mean, I put it on a 0.1.
Elliot says, can you use Finch to trade FX on TradeStation? No, TradeStation Securities no longer offers FX, so that's impossible. Hector asks, what are some of the best pairs for Finch? Watch Wednesday's webinar, and you'll see us trade the Euro US dollar, the Euro Canadian dollar, and then Hector, do some testing and find out what you like.
Cool.
Okay. So let's take a really big second trade, 10 times larger than the first, and then let's make the second trade profit 0. Or
Okay.
actually, Wes, let's make the second trade profit negative $1, meaning if it can just get back to a small loss, we'll take it.
All right. I want to watch the graph this time. That's pretty cool. I think it still got into trouble though. In fact, it got into trouble a little bit earlier.
So did it work?
I think the tester is still going. Wow.
So it's
Yeah,
stuck.
still going. Oh, there we go. Finally got out of them.
So here's an answer to the question. It's number 6 on the list of ways you get out of a bad trade. Program your robot to try to take a larger second trade with a smaller target. And what that means is program your robot so that it's more aggressive in trying to get out of a losing trade. That can get you into more trouble, but it also can solve some problems that you were having. It still breaks at the end because we ran out of data. Where was that last trade taken?
Uh, Same place. May 31st and June 7th.
Okay. So so let's now change the length of time it waits to take its second trade. So right now it waits till it's at a loss of 70 pips. Let's change this to 300 pips. So now it's going to take way fewer trades, and it may only take one trade or 2 or 3 trades total. Uh-oh. So once again, one of the ways to help your robot is to take a bigger second trade. One of the ways to help your robot is to increase the length of time that you wait to take that second trade. Now, what happened? Did it work?
Yeah, it worked. It made it all the way through. See?
Okay. So did it make less money? Yes.
Well, I mean, technically it made more money. I mean,
Oh,
because
actually, it made more money, right? Yeah,
yeah, because it didn't lose, but we had a significant drawdown,
right. Can,
14%.
how far back did we test this?
2015.
Let's go back to 2014. This is going to be bad. This can't. Even these settings won't work. The reason we show you this is to say that you can, like I've said before, and the warning was, you can over-optimize to find a set of inputs that will make it through 100%. But the only thing that you will do is increase your risk to do that. It's still better to use a small trade size so that you can just last through the bad time. It's still better to do that. The best solution to improving your trading is to use a smaller trade size. This robot is going to crash and burn in 2014, no question.
Yeah, it made it all the way to the end of 2014. Then it placed this trade, and it's not budging. Look at that, December 29th, and then placed another one January
Mm-hmm.
5th.
So our friend Arnold is mentioning something that he's missing the point. I love you, Arnold, but you're missing the point. Arnold says this, and I'm going to read it because it's important, Arnold, and your point I want to make sure that everybody understands. Arnold says the problem with the steep drawdown at the end is the trade is still open, which might recover in the future. We've already said that. We already know that. Therefore, simply end the backtest at the last close before the last losing trades were open. We do not dispute that. No one ever said that we dispute that. That's not a problem. That's not the issue. Arnold says varying the parameters will not get you out of trouble. If there's a trade open at the end of a backtest that's a losing trade, then always you'll get a big loss at the end. You're missing the point, Arnold. We already know that. We're trying to watch it get into trouble in the middle somewhere. So we kept doing it not to try to solve a problem with a time machine. We just wanted to see it get into trouble further back. So, Arnold, your point is well made. We understand what you're saying. Okay. Wesley, how did that do?
Well, not fantastic.
Still broke at the end, right?
Yeah, it held those trades from December 29th and January 5th. I mean, gosh. So,
Forever.
yeah, for a long time.
For a year and a
And then
half.
closed out. Yeah.
So now let's change the settings again. Now you can see how ridiculous this gets if you keep trying to make something work instead of just using a small trade size. Let's do a second trade size of 0.2, which is 20 times larger. And let's wait 700 pips to take the second trade. And now you can see we're just getting into ridiculous territory to try to make something work that if we had just used a small trade size, we could have managed on our own. Sky says, so if I understand, the Finch only makes $200 a year. No, that's not correct. The Finch makes however much money you want it to make based on however much risk you want it to take. So to answer your question, Sky, no robot just, once again, you don't just say, hey, robot, go make me money, and the robot says, this is all I can do. You're in charge of the settings that it uses, the trade size that it has, and the profit target that it attempts to reach. You're in complete control of that. At the beginning of running the robot, we recommend that you use very, very conservative small settings to start with, but over time you can increase those as you like. All right, what happened here?
Well, it worked. It made $182
Okay.
in 2.5 years, and it had a drawdown of 26.5%.
So let's run the Euro Canadian dollar on the same exact settings that we just did and see what happens. And then it will bring up a point that we can end with. I'll make that point.
Well, huh, wow, yeah, look at
It
that.
made money.
Yeah, $453, and it only drew down by 1.95%.
So remember, these were the settings that on the Japanese yen drew down by 25% and only made like $100. So if you send the screen back over to me, I want to mention what that means and why it's important, and then we're going to wrap up this webinar and send everybody on their way, and we'll send you the recording later on today. You want to look for a robot to be, or a trading system to be robust. And the definition of a robust trading system is a robot or trading system that can work nicely with a variety of settings. As you noticed, the euro-yen didn't work nicely no matter what kind of settings you used. But the euro-Canadian worked nicely even when we got ridiculous with our settings. That means that we want to trade the euro-Canadian, and we probably don't want to trade the euro-yen. If you trade the euro-yen, you're just walking into a situation where you know there's all kinds of ways that it gets into trouble. And if you trade the euro-Canadian, you have a little bit more comfort in the fact that on a wide variety of settings, even ones that were stupid and ridiculous, it was still doing okay. In the end, what that shows us is the euro-Canadian can deal with differing conditions, different profit targets, maybe some slippage, maybe some problems with your broker, and the euro-Canadian is going to come out on top. Whereas the euro-yen is fragile. It just doesn't do well no matter what. And there might be one perfect set of inputs on the euro-yen that would work, but everything else didn't. Be wary of robots or trading systems where one perfect setting works and the rest don't. Last of all, a giant warning. Never trade a robot if you haven't seen the code or know the system and can verify what it's using. The reason I say this is a lot of people sell robots or trading systems. They don't tell you what goes into those trading systems, and they've programmed them with exactly the perfect settings. I won't mention any names, but I know a guy who often tries to get me to do business with him, and I refuse. And he sells $2,000 to $3,000 robots. And these robots are pre-programmed, and they're black boxes, and you cannot see inside of them, and you cannot see the system that it's based upon. This is a giant problem because they sell you the robot with one set of optimized settings that make money. If you turn that robot on, you are very likely to blow up your account. And after 30 days, you can't get a refund from these people. When we give you the robot, we give you the code. So when you download the Finch, you get the code. And you can see exactly what goes into it, and you can alter it and adjust it. You can see what goes into it. If you can't get under the hood, you can't trust it. Or if you don't know the system, you can't trust it. I want that to be a warning to you. It's not a sales pitch for me. I don't sell in this webinar. If you're in this webinar right now, you're already my customer. If somehow you're not, then you should definitely go to the website and become a customer. But the point is, we want you to have a good experience. We don't want you to hand over your money. We're not here for that. We're here to teach you how to do something that we've learned how to do, and we want you to have success with it. Thank you so much for staying up so late, Wes, and doing some testing.
Yeah, no problem. I love it. My favorite type of webinar to do.
Yeah, me too. In coming weeks, in this same webinar series, you will see us optimize, which we didn't do today. It's not the point of our webinar today. And you'll see us do a bunch of other cool things with the other robots that we have. So stay on the email list, and we'll be in touch soon. Bye for now, everybody. Thanks, Wes. Have a good day.
Bye, everybody.